Hey friends, what's going on? It's Sunday, March 26, 2023. My current thought process is that I'm still bearish and still looking for bearish bullish arrays and price action. Let me explain in details, but before that, I want to show you guys this website. Head to this website to download my free Excel template. I noticed that you guys have been struggling to download that template. So go to this website, link in the description to download my free ICT trade journal, and it's completely free. This video is going to be a very quick one for this week forecast and market analysis. I really miss you guys, and I was super busy to make any videos for the past few weeks. Just so you know, part 2 of live trading of the Fiverr 20,000 live funding accounts is coming soon. Stay tuned for that. It's really challenging to record myself talking while doing live trading. I just can't focus and concentrate. I will still find a way to make it work and document the whole journey for you. Don't worry, it's coming to you. Let's look at the price action and get ready for this week and what I'm seeing in the market, my thoughts and any potential trade ideas. I also want to explain the reason why price has been low probability and why we are having high resistance liquidity. I think it's important to know that if you're not aware of where you are at the macro level, at the macro scale, it's going to be affecting your trading on a lower time frame, especially with the way ICT is teaching us at the current moment, like 5 minutes, 1 minute. These higher time frame macro are going to affect those lower time frame. If you're not aware of what's going on here, it's really going to blur your visions when you go down to the lower time frame. Before looking at the daily time frame, let's go to the weekly chart really quick. If you were to measure the daily range from this O high and to this O low, we are sitting at a equilibrium right over here. And last week, we barely closed near the equilibrium level. What that means is that the price is consolidating and we've been moving sideways. The price couldn't break out of this range and we've been sitting inside of this range for several weeks. This means that the price is harder to predict. The price action is difficult to read. You can't really hold on to winners as long. You'll be in trade where it moves 5 to 10 handles and immediately reverse. It is a lot of give and take back and forth. This market condition is really difficult to navigate. If you paid attention on backtest previous months, we are in a trending market. Look over here. Price is simply making lower low, lower high, lower low, lower high, and lower low. Very clear swings on a weekly time frame. Usually for S&P 500, it always moves very nicely, swing highs and swing lows, but the current type of condition is very difficult to navigate. Of course, there are still many trade setup opportunity, but you have to dial back your trading, reduce your risk and your expectation. You have to be very certain on your setup. You can't really let emotion get into your way in this environment and go on revenge trading. It's going to destroy you completely. Eventually, we'll get back to a market where the market is trending. These types of environment are much easier and you can let trades run to a full target and they are very fun. You don't really have to worry about price coming back to take you out. Looking at the daily time frame, if any one of you are confused what you should be looking at, especially on a higher time frame macro skills level, narrow down your focus. You don't really want to refer back anything more than 60 days. You don't really want to see the price action right over here. So roughly around 60 days, it's around this range. I'll say it's roughly around this range-ish. For me, I try to be a detective and try to figure out or make a case for both sides of the stories, bullish or bearish. Obviously, you have to have enough evidence to lean onto the one side. I believe we are still overall bearish. Reason being is because we ran out buy-side liquidity right over here, which is the O high here. That is very significant. We also return to a premium on a weekly time frame level. We also return back to the weekly time frame level. If you can see my fit right over here, we also return back to a premium level on the weekly time frame. Since that point in time when we took out our buy-side liquidity over here, we displaced lower and we have been shifting underneath these lows. And this is a bearish market structure shift on a daily time frame, turn into a bearish fair value gap. We are utilizing bearish PD arrays. We are breaking bullish PD arrays. If you look here, this is our bullish order block. And we are breaking our bullish PD arrays. That's a good sign when you're looking for bearish prices. And we also have another bullish order block over here. And the price, it closed and smashed through the bullish order block. The price disrespected the bullish order block. That means we are breaking our bullish PD arrays and respecting our bearish PD arrays, which is over here with bearish PD arrays, bearish PD arrays. Now we also have our relatively equal lows right over here. These are all sell side liquidity resting below these old lows, which is a very good sign for sell side liquidity, followed by retail trendline liquidity right over here. Lots of sell side liquidity resting below all these wicks. Within this dealing range, right over here and here, we have a break of structure. After that, the price has returned to premium and fully close this fair value gap, creating a balanced price range. Potentially, I want to see price gets up, which we did, and trade slightly above, our last week closing price before going lower this week, smashing past all the sell side liquidity, resting below all these lows. So the question is, when were my bearish bias invalid? At this point in time, I do not want to see price revisiting our balanced price range again right over here. It still can, but I prefer it not to visit the low of this level, which is right over here. Can you see how I try to make a case for both sides? Because I'm not very certain of the price in this type of market conditions. I'm still leaning onto one direction, but I'm open-minded to the fact that if we do continue higher, I have to have realistic expectation where the price could go. So if price does really close above this levels and revisit these levels, so the price could potentially take out this buy side liquidity and also this buy side liquidity to fill this value imbalance. But ideally, I do want to see price go lower because we have very nice sell side liquidity and it makes more sense to me. For trade setups, you have to look into lower time frame based on your own trading model. And that is how I would go about studying the weekly time frame, the daily time frame to look for my direction. To summarize, overall, I'm still bearish. I'm still looking for lower prices because we have a lot of sell side liquidity resting below all these lows and also this relatively equal lows. And it makes a lot more sense to me. At the same time, I'm still open-minded. If the price does trade above my balanced price range, trade above this fair value gap, and I'm also potentially looking for higher prices to take out these old highs and this old highs. That's pretty much it. Keep on honing your trading skills because you're closer than you think, and I'll see you in the next video.